Let us look at what the whales are doing right now. In the overall market, you'll see a lot of different new structures coming in, especially look at this one for XRP. A joint dismissals of appeals has been filed by the SEC and Ripple, officially bringing their nearly 5-year legal saga to a close. They're like, okay, this is too much. Let's actually end the case here. Now, the question is, the news like that should be doing what? The price of this asset should be going through the sky. Now, yes, short term, the price did push up from $3. It's up to 3.3 plus right now. If you do look at the overall market conditions, you'll actually understand, okay, this is kind of extending in itself, which is actually looking good. But the strength, for some weird reason, is not matching up. Last time it did something similar, as you can see in front of you, there was a bit of volatility, 55% drop. Now, what if this coincides with something we have always seen in last 3 years, that when XRP is about to run, now Bitcoin does something weird and it drops. So are we at that stage where Bitcoin is showing you, I want to drop, I want to push back to the downside? This is obviously a short-term chart, but a trend line which has been valid over last 30 days, a month. And you're expecting that. And it's not only that trend line, but also a region of previous support turning into a resistance. Now, where is the trouble? The daily MACD is saying, I want to cross back to the upside. I'm in the positive territory. Good, great. But the price is taking this region as a retest for the resistance. Fine. Now you step onto a 3-day and you're like, whoa. 3 days saying, I already crossed to the downside. Now go back to the history. When you have valid negative divergence in any time horizon, let it be daily, let it be 3-day, let it be weekly or monthly. Here it's 3-day, yeah? Just like this one on the last leg. And then the MACD crossed to the downside after the negative divergence. Yeah, the price initially goes up, pushing a lot of people back into the market. And then what happens? The price continues to the direction of MACD cross and the direction of RSI. So is this that 2-candle continuation pattern? I mean, it's basic, right? Trouble is, not everyone likes the textbooks, basic charts, yeah? You look at the 2-candle continuation patterns, you come up here and take that. One of the easy part is, you look through the market and you see, okay, sometimes it's 3 candles, and then it goes back to the direction of the biggest candle. Good, sometimes it's 2 candles. Now, think about the opposite. Say you look at the, I think it's a rising 2, as we call it. Oh, we'll also have to put candles. Sorry about that. Now, this is the rising 2 method. When the price goes to the one direction and then pulls back with smaller candles to the opposite direction, the price go back to that direction. We know this. But what is the trouble? It's hard to agree such thing will happen when it is against our will. Now come back to the price action and watch. What do you think is happening here? Only those who are willing to learn and adapt will survive for sure. Because what you're watching here is like 1 candle to the upside took 2 candles. 1 candle to the downside took 2 candles to the upside. And now it is testing that resistance. Textbook pattern, the odds are aligned with that thing. But because the MACD is crossing to the downside on a 3-day chart, RSI is pushing to the downside on a 3-day chart. Now you step back to weekly. You want to see, okay, what exactly is the weekly chart conveying me? Am I just crossing to the upside? Am I turning around? Am I doing something weird? This is where you are. You've completed a ABC move. The MACD is trying to cross back to the downside. RSI is still not at the overbought territory. Now, say people are arguing about an alt season. Let's look at the altcoin market. Yeah, this is the altcoin market in front of you on a weekly horizon. You got the MACD cross. The price actually didn't push that high. Yes, it moved up a little bit, but it did not go like what we have seen in the past. Just after the MACD cross, you get something like this. Now you're like, okay, fine. I'm going on to a macro, which is a monthly, which is showing me the MACD is bouncing. But the strength doesn't actually agree on that. And the strength with the price argues I'm back to the all-time highs. But the strength is not there yet. So ask yourself, when the price is going up to these highs, who do you think is selling? Yes, based on some of these people, those who are selling here are idiots. Great. But if those idiots can reduce the total accumulated buying strength, who are these idiots? Small money, medium money, big money? Yeah? Ask that question to yourself. And at that time, you should be getting a decent answer. Now, you come out of the 3-day chart, you saw Bitcoin cross to the downside. Good. Now, we'll actually compare it with the recent volatility. Say, altcoins crossed to the downside on 20th December. Good. On the MACD side, yeah? And at that time, the RSI was around 56. Good. Now we go back and pick Bitcoin. And you want to actually see where Bitcoin crossed to the downside. So this is Bitcoin on a same horizon crossing to the downside 20th December. Okay, that was very cool. Whereas this time around, it didn't happen. So it's pending. Whenever Bitcoin pulls back, alts will follow. Now, why would I say that? Because when you zoom in on a 3-day, yeah, just looking at what is happening right now, this is the structure we just talked about. It's kind of a little bit easy, but easy doesn't work that way, because it's not that easy to see the easy thing and say, okay, that is a textbook pattern. Now we go to the total market. This is the total crypto market here. Right now, it's the third candle trying to push back up on the same region and slowing down because it has less buying strength to push that up back to the upside. Now we go back on a daily. And what do you see? There is a trend line formation on the total crypto market, which is acting as a resistance for now. Now, yes, I agree. Sometimes what happens, they kind of wick it out, saying, okay, there is a valid breakout, go back in, guys, and then pull it back down. Whales usually does that too. So you cannot dismiss that as an odds. That's why I say, if you're going in shorts, make sure you are not going in highly levered, because these exchanges can see where your stop loss is and they will act on it. Remember, this is where you are on the monthly. You zoom out a little bit and you see that you're not anywhere close to the bottom, rather you're somewhere close to the all-time highs. Those who are buying at the all-time highs, thinking it's going to continue for next few months, may have difficulties. But whereas if you buy at the bottom, it's very easy to understand and adapt. Now, you pick up, say, another asset which you haven't compared. This is XLM. That thing is now going up, pushing higher to test the local resistance. And watch. You're starting to form a negative divergence because it didn't have a negative divergence on a macro before. Yes, on a 3-day, you formed at the local highs recently, but before you didn't have it on a weekly. Yeah, so that was an advantage for the asset. So right now it is trying to put a negative divergence. Let's see how high it can go to actually create that. Maybe it's the local highs which it did before. Maybe it's a little bit higher than that. We don't know. But the general market sentiment matters a lot more. Say you pick up any other asset, say you look at Solana. This is where we are. This is what we are looking at. There's a weekly chart for that particular asset. The MACD is below in a territory here. Now, some people argue that really doesn't matter. What matters is the cross to the upside or to the downside. You see this? It really bounced back up, but it didn't actually push into a bull market. Why? Because it was in the negative territory. Right now, you are in the negative territory. And not only that, but your RSI on a weekly is close to 50. Historically speaking, when you drop below that region, it is a weird panic territory. Now watch the monthly, because some of these assets kind of show you be careful. And if you're not careful, what happens? You know that the market kind of takes a wrong turn. Now, come up here, pick up another coin, which is meme coin segment. What do you see or notice on a 3-day chart as a possibility here in Doge? You've seen this before. I don't have to explain it. I just used the textbook pattern and explained it. But watch how that played out in one territory where the macro direction was to the downside. You pulled back up and then boom. Good? Now watch the opposite here. You pushed higher, then 2 candles to the downside, and then boom. So textbook patterns work very well. Sometimes it's like this, sometimes it's like this. So observe which horizons are showing you that. Maybe it's a daily, maybe it's a 3-day. Yes, I know, guys, this is boring. This is boring. Why? Because you are learning. And when you're learning, if you're bored, it's hard. And the market is hard. Now go on to the weekly side of the equation. You're watching that the price is flirting with the moving average, and we have seen that multiple times before. The price and the MACD kind of shows you weekly is here, it's below, and that is a trouble. Because whenever you have remained in the below territory, you never went into a bull market. Yeah, you went into an accumulation for sure, but you never went into a bull market. That happens when you are upside and you cross back to the upside. Now pick up the monthly. What do you see? The MACD crossing to the upside, or the MACD already crossed to the downside? Remember, here the MACD crossed to the upside, and immediately after such a cross, the price, this is the weird part, yeah? The price drops 40%, no, 33%. Here it crosses to the downside, and immediately the price goes up 100%. So you can literally watch and observe what the price has done in the past and learn from that, especially when you operate on a higher time frames to see what these big guys are doing. You have a huge advantage, because if they are doing something, they're doing that for a reason, whether it's asset A, whether it's asset B, and you see this. Now the daily showing you that pattern and the quarterly showing you this pattern means something weird is happening now on a daily, and which is already playing out on a 3-day. So keep in mind, the market will not make it easier for you, me, or anyone else. And if you see 99% of the market saying, this is about to happen, do you think 99% of the market makes money? Because historically in investing, if you read any books by anyone who has been in the market for 10, 20, 30, 40 years, they always say this: anticipating a move gives you more ROI than following a move after it started. Now, if it's just started, good, you're following the trend. But watch this and ask yourself, is this just starting a bull market, or it's been some time? I mean, from 2022 all the way here, it has been some time. The historical average time to the upside has been done, and all of your indicators are going against you. Whether you are in Bitcoin, whether you are in Altcoin, whether you are looking at the entire crypto market, you're watching a roofing pattern playing out on a macro level. Any drop here in August, this is that part. Yeah, anticipating and looking at it. Any drop in this month can bring in certain amount of volatility and show you there is another negative divergence on a monthly chart. That is not going to be favorable for the majority who are now extremely bullish and going into it. Now, yes, you pick up the charts, you are zooming in, it's good. You can look at it, you have all the tools in front of you, most of these are free, and you look through that and you try to understand, okay, fine, this is what we are doing. 12 hour, the MACD is crossing to the upside, but the price is slowing a little bit down. Cool, the MACD should push the price back up. Now we go to the 4-hour chart. You zoomed in and you're operating on that horizon saying, okay, the RSI was not able to go into the overbought territory. Let us watch if it can do that on a shorter horizon at least, because the longer horizon is getting rejected and putting in lower swing highs. So if the next candle closes anyway in this territory based on the textbook pattern, Be careful of those who are feeding the hyper parabolic bullish narrative and looting you guys, because I have very little viewers. Yeah, if you guys take the right decision, I don't think the exchanges can or want to liquidate you. Rather, they will look at the majority and see, okay, there is a pool of liquidity with a stop loss here. Yeah, what should they do? I mean, think about this. If you go long saying, okay, this is the low, I'll keep my stop loss here, and you're looking for this, good. Well, the exchanges go to liquidate them, or there is very little individual saying, okay, I'm keeping my stop loss here in this territory, I'm looking for this. Which kind of liquidity does the exchanges want? They can see both the end. They'll actually take action to make the most money, the most number of spread, meaning most of them will go back in immediately after getting liquidated with whatever they have left. So the exchanges get the spread when they liquidate you, and when you go back in to buy into the same direction. That's where the stop loss hunt begins. Right now, do you think there is stop loss hunts happening to the upside? Do you really see that amount of momentum, FOMO, pushing the price to the upside? Or it's slowing a little bit down to attract the other direction? That's all for today, and make sure you hit that like button if you learned something new or you think you received value.